Okay, today we see how to calculate the exempted house rent allowance and taxable house rent allowance. This is the question. Compute the taxable and exempted house rent allowance from the following assessee. There are two assessees for the previous year ending 31st March 2020. Okay, particulars B of Belgaum, D of Delhi. There are two assessees. You have to calculate taxable and exempted HRA separately. First, you have to calculate the assessee B of Belgaum, and secondly, you have to calculate D of Delhi. Okay. Then salary for the year is 4,50,000. First, second is 7,50,000. House rent allowance is received is 40,000 first, second is 1,10,000. Third is actual rent paid is 46,000. Second is 1,20,000. Then, as per our income tax rules, under section 10, subsection 13A, actual HRA received is the first point. Rent paid minus 10% of salary is the second point. Then 50% or 40% of the salary is the third point. Okay. Least of the three is exempt and excess is taxable. Okay. Now we calculate one by one. You see here. First I will calculate the B of Belgaum. Computation of total, taxable and exempted HRA of Mr. B of Belgaum for the assessment year 2020-21. This is a chart, particular amount. First, you take the house rent allowance received. House rent allowance received is 40,000. You take 40,000. Then secondly, you take less exempted HRA under section 10, subsection 13A. That is, first point is actual HRA. Actual HRA received is 40,000. You take the same amount, first point. And second point is rent paid minus 10% of salary. Salary means basic salary plus DA if eligible for retirement benefit. Remember this. Okay. So rent paid is 46,000. Rent paid is 46,000. He paid rent 46,000. And 10% of salary. Salary is 4,50,000. Of that, you take 10%. So this is the 46,000 minus 45,000. 10% of salary is 45,000. Its answer is 1,000. 46,000 minus 45,000 is equal to 1,000. Then third point is 50% or 40% of salary. 50% of salary is applicable to 4 cities. Bombay, Delhi, Madras, Kolkata. These 4 cities, 50% take. And other than these 4 cities, you have to take 40% of salary. So he is living in Belgaum, therefore you take 40% of salary. 40% of salary is 4,50,000 is salary, 40% of this is 1,80,000. Okay. These are the 3 items you calculate. Then least of these 3 is exempt from tax. So least of the 3 is 1,000. 1,000 is exempted. Whichever is less is exempted, you take to the outer column. 1,000. Least of the 3 is 1,000. You take to the outer column. Therefore, the taxable HRA is rupees 39,000. Out of 40,000, you deduct 1,000 exempted. Remaining is taxable. Remaining is 39,000. This is taxable. This is the Mr. B of Belgaum. Now we calculate D of Delhi. Okay, D of Delhi. You see here. Taxable and exempted HRA of Mr. D of Delhi for the assessment year 2020-21. This is a chart. Actual HRA received is 1,10,000. Okay. Actual HRA received is 1,10,000. Less exempted HRA. Actual HRA received, first point, 1,10,000. Second point is rent paid minus 10% of salary. Rent paid is 1,20,000. Rent paid is 1,20,000. His salary is 7,50,000. 10% of 7,50,000 is 75,000. Okay. So 1,20,000 minus 75,000 is equal to 45,000. Okay. Then third point is 50% or 40% of salary. In this case, you have to take 50% of salary because he is living in Delhi. His residence is in Delhi. Therefore, you have to take 50% of salary. 50% of salary means salary is 7,50,000. 50% of that is 3,75,000. Okay. Least of the three is exempted. Whichever is less is exempted, you take to the outer column. So least of the three is 45,000. 45,000 is exempted. Remaining balance is taxable. Okay. Taxable HRA is 1,10,000 minus 45,000. 65,000 is taxable. In this way, you have to calculate taxable HRA and exempted HRA. Okay. Next, come to the another example. You see here. Compute the taxable and exempted HRA of the following assessee for the previous year ending 31st March 2020. Okay. Here, salary for the year is given. First assessee is B of Goa. He is living in Panji. And D of Delhi. Okay. Salary is given. HRA is given. And actual rent paid is also given in the problem. Okay. Then you calculate one by one. First, I will calculate the first one. B of Goa. B of Goa. Okay. B of Goa for the assessment year. You write heading properly. Then draw the table. Actual HR received is 30,000. His actual HR received 30,000. Less exempted. Less exempted. Under that, first point is actual HRA 30,000. Rent paid minus 10% of salary. Rent paid is 35,000. Rent paid is 35,000 and salary is 3 lakh. On 3 lakh, you calculate 10%. Okay, 10% of 3 lakh is 30,000. So 35,000 minus 30,000 is equal to 5,000. Then third point is 50% or 40% of salary. So he is in Goa. Okay, Panji. 50% is to be taken only for 4 cities. Bombay, Delhi, Madras, Kolkata. For these 4 cities, only 50%. So you have to take 40% of salary because he is in Goa. 40% of 3 lakh is 1,20,000. Least of the three is exempted. So whichever is less, you take to the outer column. 5,000 is exempted. 30,000 minus 5,000 is equal to 25,000. 25,000 is taxable. 5,000 is exempted. In this way, you calculate. Okay. Next, I calculate the D of Delhi. D of Delhi. You write the heading. First, you take actual HRA received. Actual HR received is 50,000. Less exempted. Under that, first actual HR received 50,000. Rent paid minus 10% of salary. Rent paid is 1 lakh. You see here. Rent paid is 1 lakh. His salary is 5 lakh. His salary is 5 lakh. Rent paid 1 lakh. Salary is 5 lakh. Then 10% of 5 lakh is 50,000. 10% of 5 lakh is 50,000. Okay. 1 lakh minus 50,000 is equal to again 50,000. This is 50,000. Then third point, that is 50% or 40% of salary. So you have to take 50% of salary because he is in Delhi. 50% of salary is 5 lakh salary. 50% of that is 2,50,000. Therefore, least of the three is 50,000. Out of these three, least is 50,000. 50,000 is exempted. You take to the outer column. So whichever is less is exempted. 50,000. Then 50,000 minus 50,000 is equal to nil. Exempted is 50,000. Taxable is nil. In this way, you have to calculate. Sometime you see here salary is 50,000. What happens regarding this point? Rent paid minus 10% of salary. Maximum mistakes you commit here only. Okay. Rent paid is 1 lakh rupee, and suppose the salary is 50 lakh. Okay, 50 lakh. Then 5 lakh is the answer. If the rent paid is less than 10% of salary, you put 0 here, and the 0 is the least. That is to be exempted income. This point you remember. Whenever the example comes, I will explain it. While assessing the answer papers in the university, I experienced this point. Therefore, you remember regarding the calculation of the HR. In this way, you have to calculate HRA. The HRA will come in each and every problem of salary, which we will study in the next coming days. Okay, you see here. Find out the exempted HRA from the following. Basic salary is 7,200 per month. Okay, per month salary is given in the problem. So you have to multiply by 12. Annual salary you have to take. Remember this. First to take dearness allowance 200 per month. Enter into retirement benefit and it is eligible. Therefore, salary means 7,200 plus 200. Total 7,400 per month. 7,400 into 12 you have to make. Otherwise, you calculate monthly and then deduct. Calculate annually. First you calculate monthly, then show the annually. First you calculate monthly, no problem. 7,200 plus 200, 7,400 is the salary because dearness allowance is eligible for retirement benefit. House rent allowance received 3,000 per month and rent paid by employee is 2,000 per month. This is the example. Then you have to calculate the 3 points. Okay, 3 points. First is actual HRA 3,000. Okay, rent paid is 2,000 minus 10% of salary 7,400 into 10% means 740. 2,000 minus 740 is 2,000 minus 740. That is 10% of salary. I think it is 1,260. 1,260. And third point, 40% of salary. Because place is Gulbarga. 40% of 7,400 you calculate. Then automatically 1,260 is the least. 1,260 is the least. You deduct in the outer column. Remaining is taxable HRA every month. Per month. Per month HRA taxable. Per month exempted. You calculate. Or you multiply by 12. Okay. Multiply by 12. For the 1 year. For 1 year. If the answer is given here, you must tally the answer. Okay. You calculate monthly. Then at the end of the year, you multiply by 12. Otherwise, you calculate annually. That is 7,400 into 12 annual salary. HRA 3,000 into 12 per annum. Rent paid 2,000 into 12. First you calculate these things and draw the table and calculate exempted and taxable HRA. Then the next example is Mr. Ajay, who retired from the service, encash the leave salary. It is based on leave salary. I will solve this problem tomorrow. I'll solve this problem tomorrow. Encashment of leave. Okay. And you see this problem. Find the exempted house rent allowance in the following cases. Okay. Monthly is given, therefore you have to convert it into annually. You take the same table and calculate annual salary. First you calculate annual salary, A 30,000 into 12, B 40,000 into 12. HRA per month is there, annual HRA 5,000 into 12, 6,000 into 12. Actual rent paid 7,000 into 12, 5,600 into 12. In this way calculate annual base. Then calculate the exempted and taxable of Mr. A. Calculate exempted and taxable of Mr. B. Okay. Then the place is not given in the problem. I think particulars exempted HRA house rent in case of under section 13A, particular salary is given. Place is not given. Okay, place is not given. You take 40% of salary. Okay, you take 40% of salary in the third point. Next, find out the exempted HRA and taxable HRA. It is also per month base. You calculate annual salary. You draw the same table as given in the problem. You take the salary, annual salary 15,000 into 12, 20,000 into 12, DA allowance, dearness allowance 5,000 into 12, another is 1 lakh per month. It is wrong, I think. It is 1,000 per month. Okay, dearness allowance per month. And HRA received per month 3,000, 5,000. Multiply by 12, 3,000 into 12, 5,000 into 12. House rent paid 2,500 into 12, 4,500 into 12. In this way, calculate the annual amount. And this DA is to be considered only when it is specified by the income tax authority or employer regarding eligible for retirement benefit. Only when eligible for retirement benefit is given in the problem, you take as a salary. Otherwise, it is to be eliminated. It is to be not considered. Remember this point. Dearness allowance eligible for retirement or comes for calculation of retirement benefit is to be added in the salary. Otherwise, the salary dearness allowance is not to be considered. This is the point you remember, and you solve this problem. Okay, these are the examples based on HRA. You solve these problems tomorrow in the classroom. If there are any problems, you ask me. I will come to college tomorrow.